Welcome back to the Daily Crypto Roundup. If you've been with us since the start, you already know how this goes. We dive straight into the stories shaping the market and make sense of the chaos. And if this is your first time listening, hit follow right now because you found the podcast that cuts through the noise and gives you the narrative that actually matters. Today is a huge episode. Bitcoin has just smashed through $120,000, putting the bulls firmly back in control. Altcoin ETFs are lining up for what could be a historic October. The ruble-backed token that sponsored TOKEN2049 is sparking geopolitical controversy. And the UK's Financial Conduct Authority is delaying access to crypto ETFs for retail traders, frustrating the entire London market. On top of that, we've got fresh analyst takes from JPMorgan and Fundstrat, and a momentum story that suggests we're only just getting started. Strap in, because this one is packed. First, let's run through the prices so you know exactly where the market stands. Bitcoin is trading at about $120,100, up roughly 3.9% in the past 24 hours, and sitting at its highest level in 2 months. Ethereum is on the move too, up 4.5% to about $4,490. Binance Coin is trading just over 1,018, up about 2% on the day. Solana is holding strong at $219, up nearly 3.4%. XRP has pushed up to $2.95, adding just over 2.5%. Cardano is steady at 76 cents, with a modest 1.8% gain. Dogecoin is back at 27 cents, climbing more than 3%. Avalanche is trading at $46.10, up 2.7%, while Toncoin sits around $7.11, up about 1.5%. What's striking about this snapshot is the consistency. Green across the board, not just in Bitcoin, not just in Ethereum, but in almost all the majors. That kind of broad participation is what traders love to see because it suggests momentum is spreading, not just concentrated. And with that backdrop, let's turn to the story of the day. Bitcoin breaking through 120,000. For weeks, the market has been flirting with resistance around 117 to 118,000. Now, with strong ETF demand and institutional positioning, we've broken out. Analysts are taking notice. Marcus Thielen at 10x Research said this week, Bitcoin is tracking historical seasonal patterns perfectly. October has a track record of outperformance, and the break above 120,000 confirms that institutional flows are aligned with retail sentiment. Fundstrat's Tom Lee went even further, suggesting that the setup for Bitcoin could take us toward 145,000 in this cycle. And JPMorgan put out a note drawing comparisons to gold's record-breaking run, saying Bitcoin could reach 165,000 if it tracks gold's relative performance as a store of value. Those are big numbers, but they aren't just hype. They're based on capital flows and macro analysis. What's driving this? ETFs. Since approval, Bitcoin ETFs have been soaking up supply at a pace far faster than new coins are being mined. That creates a structural imbalance. More buyers than sellers, and a price that has no choice but to grind higher. When you layer on top of that seasonal optimism, October is historically one of Bitcoin's best months. You get what some traders are already calling Pumptober. It's not just about the number on the screen, it's about psychology. Breaking a big round number like 120,000 flips sentiment. People who were cautious start to chase, shorts start to cover, and momentum builds. But let's not sugarcoat it. Resistance always brings risk. Some analysts warn that if Bitcoin fails to hold 120,000, we could retest 117 or even 115 as traders take profit. That kind of pullback would be normal, even healthy. But for now, the bulls have the upper hand. Now let's talk about altcoins, because this could be their moment too. October is shaping up to be decisive for altcoin ETFs. Cointelegraph reports that there are 16 applications pending with the SEC, covering assets beyond Bitcoin and Ethereum. Solana, XRP, and even niche products are on the list. If any of these get approved, it opens the door for new inflows into assets that have historically struggled to attract institutional money. It's one thing to buy Solana on an exchange, it's another to have it listed as an ETF on a major US platform. That's a game changer. Analysts are excited. Lark Davis tweeted this week that Altcoin ETFs are the missing bridge between retail hype and institutional allocation. Once they're here, capital will diversify, not just concentrate. The counter-argument, of course, is that the SEC has been slow to approve even Ethereum ETFs, let alone smaller coins. But with new listing standards being adopted, there is genuine hope that altcoin ETFs are no longer science fiction, but something we could see this quarter. And that brings us to TOKEN2049, the massive Singapore conference that drew 25,000 attendees. We've already talked about the spectacle, ziplines, DJs, big names like Justin Sun and Donald Trump Jr. But the headline that's sticking is the controversy over a ruble-backed token called a 7A5. This token, tied to the Russian currency, was listed as a sponsor of the event despite sanctions. After scrutiny, TOKEN2049 organizers quietly removed references to the token and its regulatory director. Why does this matter? Because it highlights the geopolitical crosscurrents running through crypto. For years, governments have worried that tokens could be used to bypass sanctions. A ruble-backed coin sponsoring one of the biggest conferences in the world is a perfect example of why those concerns never go away. Reuters quoted analysts saying the episode shows how crypto remains a battleground for geopolitics, not just finance. That's important context. Crypto isn't in a vacuum. When a sanctioned asset or entity tries to slip into legitimacy through conferences or sponsorships, it invites regulatory backlash. And that backlash can spill over into broader skepticism about the industry. It's a reminder that adoption isn't just about technology, it's about trust. Speaking of trust, let's shift to the UK. The Financial Conduct Authority had planned to open the doors to retail investors for regulated crypto ETFs, exchange-traded products. But in classic FCA fashion, the rollout has been delayed. The London Stock Exchange and the FCA are blaming coordination issues, saying the market wasn't given enough notice. Retail traders, of course, are frustrated. This was supposed to be the moment that ordinary UK investors could access regulated crypto exposure through their brokers. Now it's stuck in limbo. The Financial Times reports that exchanges are pushing back, saying the FCA's foot-dragging risks dampening enthusiasm and leaving the UK behind peers in Europe and the US. So we've got Bitcoin breaking highs, altcoin ETF decisions looming, a geopolitical controversy, and regulators once again slowing things down. What ties all this together is the theme of momentum versus friction. Momentum is on the charts, with Bitcoin surging and majors rallying. Momentum is in the capital flows, with ETFs and VC money pouring in. But friction is everywhere too. Regulators holding back, geopolitics casting shadows, and skepticism over security and hacks. This push and pull is what defines crypto markets. They never move in a straight line, but they always move with intensity. Now let me pause for a moment, because if you're listening to this and you hold crypto, whether it's Bitcoin, Ethereum, Solana, or a bag of smaller alts, you need to protect it. I've said this before, but it matters more than ever in times like these. Exchanges can freeze, regulators can interfere, hacks can drain protocols overnight. The only way to truly control your crypto is to hold your keys. That's why I always recommend a Ledger hardware wallet. It's simple, it's safe, and it means that no matter what happens in the market or in regulation, your coins are yours. I'll drop the link in the description. Check it out. And don't be the person posting a screenshot saying, "If only I'd kept it safe." Alright, let's zoom back in and go deeper. Bitcoin at 120,000 is the headline, but the implications are much bigger. This level proves that ETF demand isn't just hype. It's real, structural buying pressure that is rebalancing the market. Institutions aren't just dipping their toes, they're wading in. And as they do, it creates a foundation that retail can build on. In past cycles, retail came first, and institutions followed. This time, it's flipped. Institutions are leading, and retail will chase. That's why this cycle feels different. Altcoin ETFs are the next logical step. Once Bitcoin ETFs prove themselves, the case for Ethereum, Solana, and XRP becomes easier to make. And once those doors open, the question of altcoin season gets interesting again. Could we see another wave like 2021, where money rotates down the chain? Possibly. Could it be more selective, with only majors benefiting? Also possible. Either way, the infrastructure is being laid right now. The TOKEN2049 ruble token controversy might seem like a side story, but it's actually crucial. It shows that crypto can't escape geopolitics. As adoption grows, scrutiny grows too. That scrutiny can be painful in the short term, but it also forces the industry to mature. Projects tied to sanctioned assets won't survive, and that's good. It weeds out the noise and builds legitimacy for the rest. The FCA delay is the same story told differently. Regulation always lags innovation, and in the UK it lags badly. Retail investors want access, institutions are ready to provide it, but the regulator gets cold feet. Eventually the UK will catch up, but every delay is an opportunity lost to Europe, to the US, to Asia. Singapore is thriving because it's welcoming. London risks falling behind because it's hesitant. So where does that leave us? With a market that's bullish, yes, but also fragile. 120,000 is a milestone, not a finish line. The path from here could go either way. If Bitcoin holds above this level and ETFs keep soaking supply, we could see 130, 140, even 165 as JPMorgan projects. If momentum fades, we could see a retest of 115 before another leg higher. Alts could benefit massively if ETFs get approved, or they could lag if regulation continues to choke them. And geopolitics could flare at any moment, throwing more obstacles in the path. But here's the key takeaway. The energy is back. We aren't in the dead market of 2022. We aren't in the cautious grind of 2023. We're in the early stages of something bigger, where momentum is real, where institutions are engaged, and where retail is circling. If you've been waiting for a sign, this is it. The market is alive again. That's today's Daily Crypto Roundup. Bitcoin breaking 120,000, alt ETFs on the horizon, geopolitical drama in Singapore, UK delays frustrating traders, and a wave of capital pushing the market forward. Stay sharp, stay safe, smash that follow button, and let me know. Do you think this is the start of a run to 165,000, or just a fake out before another pullback? Either way, we'll be here every step of the way. Thanks for listening, and as always, we will see you at the top.